Ladies and gentlemen, are you ready for the biggest event for markets of this entire year? Yes, we are talking about the election, which is going to take place today. Voting is currently ongoing. Hopefully you voted early, so you didn't have to wait in those sometimes 2+ hour long lines. Nonetheless, we're here to talk about markets and the implications for the election, in which I have to say, things look pretty good. And yes, I have been a bear. I think there is a strong bear case at the same time as there is a very strong bull case. But I have to say, I'm leaning more towards the bull case for the outcome of this election. No matter what happens, you are going to see uncertainty lifted off of our markets. No matter who wins, there's going to be a little bit less uncertainty. Now, I also when I think about this, I've heard contested election, and we're not going to know the results of the election for weeks, right? We all have. That's kind of grown to be the consensus at this point. In fact, I think we're going to know who the president is by late tonight. Why do I say that? Well, as I sit here with Fox News on, not to be, political, I just think they have the best coverage of the election. And yes, the cruise ship has Fox News. They are showing all of the swing states from the last election and when the results came in for those swing states, and by midnight, how much of the vote was counted. In all of the swing states, Wisconsin, Michigan, Pennsylvania, Georgia, right? You had 85% or more of the vote counted that night. Unless it's super, super, super close, you're pretty well able to call a state after about 75% of the vote is completed. So it would seem likely to me, from that standpoint of the 2020 election results and the time frame in which it took to actually count votes, we should know who the president is tonight. I think that in and of itself is going to be a positive shock event for the markets. Since everyone's growing to expect a contested election, knowing who the president will be tonight, no matter who it is likely going to be a positive. Now, here on the day today, there's a couple different factors I want to share with you. First and foremost, what does the stock market typically do after the US election? Well, in 2020, you were up 2.2% the day later. There was a lot of money printing. There was a lot of stimulus at this time, and things were just fine in November of 2020, relatively speaking, right? Markets didn't peak out until the following November. So yes, we had a very positive reaction after the election. Again, you lift that uncertainty. In 2016, the day after the election, when Trump won for the last time, markets were up 1.11% the day after. In 2012, markets were down 2.37% the day after. And in 2008, markets were down 5.27% the day after. But there was really, broader recessionary fears at the time. Bottom line here, median return is negative 0.66% the day after the election. A week after the election, you're typically down 0.31%, but a month later, you're normally up about 2.4% following the election. Now, this is not really what I want to show you. What I really want to show you is the VIX. The VIX is down 7.60% today. But you're still at 20.31. So the expectation of volatility is still high. That's why the VIX is high. After you get certainty about who the president is going to be, that could definitely fuel some hedges being taken off of portfolios. So how the VIX works is it monitors the puts and calls on the S&P, right? The skew of that. So when the VIX rises, there's more puts being bought than calls. After this election, after the results of this election, you are likely going to see the VIX fall. You're likely going to see some of those puts being sold and some short positions being covered on. Hedge funds and institutions, big money, they don't always like to go out and hedge their portfolio with puts. Sometimes it makes sense to just hedge by shorting stock. Short some stock, and you're obviously long another stock. It can help hedge out. So after the election, you could see a lot of shorts covering based on the VIX. The VIX as a measurement will tell you that there could be a lot of shorts covering over the next 24 to 48 hours, and that would definitely boost the markets higher. Now, the big thing that I'm noticing today is although your indexes are in the green by quite a margin at the time of recording this video, the S&P is up 0.93%, the NASDAQ up 1.15%, the Russell is up 0.83%, and the Dow is up 0.74%. Now, I'm actually really excited about the makeup of this move today. So if we take a look at the RSP is up 0.66%, and that's better than Apple. That's better than Google. That's not as good as Microsoft or Amazon or Meta or Nvidia, but you are seeing the equal weight outperforming some of your other big tech stocks. Now, yes, Nvidia is kind of, are you really going to compare Nvidia to some of these other stocks in terms of how liked it is, how invested it is, right? So clearly big tech is also going to benefit from markets going higher. But I think from the standpoint of where do hedges get covered, it's likely not where the shorting activity has taken place in big tech, at least from what I can see. It looks like a lot of the shorting activity has taken place in the Russell. It's taken place in the more sensitive areas of our markets. So from a pure, removing uncertainty standpoint, I don't think big tech is going to benefit nearly as much as the broader markets. Now, depending on who wins, different sectors may perform a little bit better. But I think from a generalized standpoint, I'm expecting more of a broad-based rally no matter the outcome of this election. So I don't think it's going to be led by big tech, right? I think it's going to be a broad-based rally, especially if we consider bond yields. Now, this is something I have just beaten home almost every single day here on this channel. Bond yields today for the 10-year Treasury, okay, they're up 5.5 basis points to 4.364%. Bond yields, number one, have went insane in recent weeks, like insane. Since September 18th, bond yields have went up, 90 basis points? The rise in bond yields has been insane. So whether this is justified or not over the 10-year period of the 10-year Treasury, who knows? Maybe we do have higher inflation, better economic activity. Maybe it makes sense for 10-year Treasuries to be priced where they are now. But in the short term, you are likely going to see a sell down in yields. You're more likely to see yields fall than to continue to go up at this point, even if it is, after all, momentarily. Now, we have the Fed meeting on Thursday. But coming into Thursday, there's a much stronger case for 10-year Treasury yields to fall rather than to go up further after the election. And this is the big reason why I think we will get a broader market rally if we get a rally after the election, really coming tomorrow. I think 10-year Treasury yields are due for a pull down, lift uncertainty with yields falling. That is very supportive to small caps, industrials, cyclicals, banks, depending on who wins. Like if Trump wins, banks are going to do a little bit better. Tech's going to do a little bit better. Small caps are going to do a little bit better. If Kamala wins, big tech's going to do a little bit better. Green energy is going to do a little bit better. Minus Tesla, because current administration does not like Tesla too much, and Elon and Trump get along very well. So there's going to be different sectors and different winners, just however this thing plays out. But at this point, I see a stronger bull case for markets to go higher tomorrow. Now, what happens with the Fed on Thursday, if they're, kind of super dovish, like I'm expecting they will be, or if they're more, on the concerned about inflation side, we will see, and that will obviously help drive markets on Thursday. But even from the Fed's perspective, I don't think the Fed likes where 10-year Treasury yields are right now. Think about it like this. The Fed was trying to accommodate markets when 10-year Treasury yields were at 3.6%, 3.62% and some change. They are at 4.34% today, almost 4.35%. That's not where I think the Fed wants 10-year Treasury yields to be trading at. It's just, it puts a lot more restriction on the economy. It really slows things down. It's like slowly, constricting something, the higher yields go from here. So I think even from that perspective, that supports bond yields falling. We just had a 12,000 jobs number. Like, are you serious? Treasury yields went up like 10 basis points when we got that 12,000 job number. I think you're due for a large pullback in yields, which more than likely gives you a rally in markets. Now, if Trump wins, obviously we can go through scenario by scenario, but if Trump wins, does the fear of higher tariffs and higher inflation eat away at markets? Is this like a panic moment? I don't think so. I think it's one thing to campaign for something and another thing to actually do it. Look at all the student loaners that voted for Biden in 2020 that were promised student loan forgiveness. That never happened. Just to point one thing out, there's a lot of things that, politically speaking, Trump or the next guy did not do compared to their, campaign promises. This is another one of those things. You start... When you sell a house, you don't start at the lowest price you would possibly take, right? You always go like 10% above what you're willing to actually take. So if you're willing to sell your home for $300,000, you're not going to list it at $300,000. You're going to list it at like $375,000. So that person that's buying the house thinks they're getting a better deal. They got you down to $300,000 and you were just fine taking $300,000 anyways, right? That's kind of like negotiating tariffs. I don't think the markets truly buy the whole, we're going to have 100, 200, 300% tariffs on things. That is just fear mongering. I think it makes good headlines more than it actually is plausible. So from my perspective here, it actually, looks like there's a pretty good risk to reward for markets heading into tomorrow. I think there's a much greater chance that markets are higher tomorrow than lower. Really, no matter who wins. Now, with that said, today in after hours, you do have Super Micro, Devon, Lumen, Kinross, Coupang, Microchip, Big Bear AI, Exact Sciences, and iRobot. Tomorrow morning, you have Celsius, Novo Nordisk, CVS Health, Aora, Teva, Cedar Fair, Toyota, Johnson Controls, and American Electric Power. And then tomorrow in after hours, you have ARM, AMC, Qualcomm, Elf, Clover, AppLovin, Mercado Libre, and IONQ. So some pretty large names here that could have an impact to NVIDIA, and that's something to watch for, specifically ARM and Qualcomm. Now, ISM Services PMIs today came in at 56. The estimate was 54.8. That does help explain some of the rise in 10-year Treasury yields that we were seeing. That 5 basis point rise, this actually makes sense because the data came in stronger. What I've grown a little worried about in recent, days and weeks is the rise in 10-year Treasury yields, even when we got a really bad jobs report, even when we got, really bad consumer metrics. Like, that shouldn't have happened. Today's correlation with bonds makes a little bit more sense. With that said, the percent of stocks trading above their 50-day moving average at the time of recording this video is up 4.2% today. So 4.2% of all stocks are breaking above those 50-day moving averages, which that just shows today is actually a pretty strong day broadly for the markets. Percent of stocks currently above 50-day moving averages is at 53.4%. So some pretty good numbers. As far as tomorrow, we really don't have anything for economic data. We have a 30-year bond auction. May or may not be important. Probably not. I think all of the attention is going to be on who's the next president. Do we know who the next president is? And how do we position portfolios for this? Again, the biggest risk with not knowing who the next president is liquidity drying up. From that standpoint, as long as we know who the president is going to be, you should not see liquidity dry up. that's an opportunity for people to reposition portfolios, sell stocks here, buy stocks there, to get some liquidity actually flowing. This is something, Tom Lee has said for a while now, that he's hearing from clients that they don't want to make any big portfolio moves until they know who the president is going to be. No matter who the president is going to be, I think that gives a large group of people a reason to be bullish. It's going to give another large group of people a reason to be bearish, but it's not going to give everyone a reason to be bearish, like if we don't know who the president is. So again, in my personal opinion, we are going to find out who the president is late tonight. I will cover that in a video if I am able to, if it's within a reasonable, time. We will cover that tonight. I would go live, but we're using this is Starlink internet from, Elon's company, and it's good, but it's not great. It takes like 30 minutes to upload a 10-minute long video. That's why I'm trying to make these videos a little shorter, more compact, condensed with information, instead of, talking too much, which I talk a lot anyway. So that's why the videos are a little shorter, and I highly doubt there would be any way to actually go live. So I'll keep you guys updated on what happens. Futures will be interesting to watch. If you guys want to go follow real-time updates from me and others, go to X and go ahead and follow Michael Tyler over there. That is my X account. Love to see you over there. With that said, ladies and gentlemen, let me know what you think about this information down below in the comment section. From the perspective of the SPY, we did bounce pretty much of this 50-day moving average in recent days. If we get above that 20-day moving average at about 578.83, about $3 from here, $3 and some change to the upside, that paves the way for a larger breakout. And again, I think a rally from here is really going to be in your broad markets, not just big tech. So how does the market cap, weighting affect the S&P? Theoretically, you could see small caps and industrials rip higher. If big tech doesn't do much, you might actually not see the biggest move on the headline S&P, but internally markets could rally higher. I also think when you look at metrics like the percent of stocks trading above their 50-day moving average, only at 53.4%. I mean, just not too long ago, you were at 70+% and closer to 80% of stocks trading above their 50-day moving average. So there's definitely some room for markets to get better here. Look at the CNN Fear and Greed Index. It's at 45. It's barely a neutral. It's pretty close to fear here. I mean, look at the VIX at over 20. There's definitely some room for volatility and fear to come down, which will be great for markets. Now, Tesla stock today was up over 4%. I do believe if Trump gets into office, this will be better for Tesla, obviously, because the Trump-Elon relationship, call it what you want, but more favorable policies would likely be enacted for Tesla. And really, it would be less favorable policies for maybe other EV startups, which would benefit Tesla. So I think there is a clear beneficiary to your Tesla investment if Trump does win, and I think that would be reflected in Tesla stock. Now, every one of these things we've talked about here in this video is specifically related to Tesla as well. There's been a lot of shorting activity in Tesla in the last couple of weeks. We did see short interest drop a lot after the Robotax event, specifically after Tesla earnings. It ramped back up. Short interest went up by about 15 million shares. You did see about 1 million shares cover yesterday, about 400,000 or so covered today. But if Trump does win, you're going to see more shorts cover than you otherwise would see if Kamala wins, and likely would be a larger rally for Tesla stock. But I think either way, whoever wins, you're probably going to see shorts cover in Tesla, a bit of a short squeeze, maybe even for the markets in the near term, and a more prosperous situation most likely. Economy's good, earnings are coming in okay. We have bond yields that have already went up a lot. Odds are they do come down. And specifically, if Trump wins, favorable policies for Tesla could be enacted. So I don't really know what there's not to like here. There's the situation of, is this going to be really good or just good, right? It's really good if Trump wins for Tesla. It's just good if the uncertainty goes away. As long as we know who the president is tonight or by, midpoint tomorrow, that's going to be great news for markets in general. In my personal opinion, there's obviously the chance that things could go sideways and things would not be good, but I see a very strong bull case for markets here compared to the bear case. So let me know what you think about this information down below in the comments section. You guys have a great rest of your day, and I will see you in the next one.